What's up, guys? Z-Rex back for round 2. I goofed on that last one and forgot to click share screen. So I was over here clicking around things, showing you, in big quotes, charts. Or so I thought, and about at the 50-minute mark when I was wrapping it up, I'm like, oh, damn. Y'all can't see that. So, the audio is still there. I'm just going to redo the whole thing. Because you know what? It's just how I roll. Alright, guys. Here in 2 to 4 minutes, we're going back for round number 2. We're going to get it right this time. All right, bear with me for 1 second. Again, this is Noiz Research with Z-Rex. I was just explaining the pretty silly mistake I just made. But that's okay. Live and learn, baby. I'll be right back. All right, we're back. We're gonna try this again and try not to make some rookie-ass mistakes. Man, that's a couple rookie mistakes that I've made here recently in life. I just explained it on the other one. I'll go over it a little bit later. A little trader mistake. All right, but so I did not do this the last time. This simple. You can't see it, it's off screen on a different screen, but didn't do that simple thing to where you can see the screen that I want you to see and not the starting screen. Boom, it's all good. Again, Z-Rex, Noiz Research. This is what that is. Let's get into it for round 2. Take 2, I guess would probably be a better way to say it. Take 2. Ledger adds quite a few coins here recently. One of them I really like. And y'all, if you know me, you know which one it is already. But they've added POA, Icon, VeChain, WAN chain, or One Chain. They are here in Austin, and I'm pretty sure that the CEO said it's one chain, like one, the number one. So ontology, koala, particle, RSK. I'm not sure what RSK is. Let's see what RSK is. Rootstock. Oh, okay. I've heard of that. Don't know a lot about it, but I'll have to check into that, and I will talk about it maybe in a tomorrow, possibly, because it can be added to the Bitcoin blockchain, a smart contract on BTC. What? I know everybody wants that. Gosh, what would that do to Ethereum price? Not sure. Let's back up to Ledger. So yeah, they're adding all that stuff. That's awesome, and they're already unavailable, or they are available, not unavailable. Is kind of how that sounded on Ledger Live. So, bam, pretty dope, good stuff. Nano S is pretty slick. I have not used the newer one. It's like blue or something like that. It's got like a screen. I think it's more like a keep key. Don't quote me all the way on there. But the simplicity of the Nano is great. Couple buttons. It's sleek looking. It performs. I've never had any issues with it. Good stuff. So, there you go. If you didn't know, now you know. Shapeshift partners up with a guy down here in Austin from Bitfract. And that's pretty dope. I remember when I saw this first, I was like, dude, this is a great idea. Keep doing it. And I'm glad that he did, because Shapeshift just got it. That's awesome. Love to see that. Congrats. Congrats. Woo! Willy woo! That's awesome. So if you don't know what Shapeshift, y'all probably know what it is, but you probably don't know what Bitfract is trying to do. So they use the back-end APIs of Shapeshift, which is an easy way to convert coins. But what they did with Bitfract is it's kind of a clever name, right? You take your Bitcoin and you kind of fractionalize it up across the different assets that you want in a really easy transaction. And we're just going to go ahead and go over to their website, and I'm going to show you real fast, because I think it is pretty useful and people will find it. So here you go. It's so simple. Bam, here it is. Click it a little bit, add whatever assets. You can go in here too. It doesn't have to be BCH. I mean, you can pick all the different pairs that they have. I don't know, whatever. Some red coin, double red coin. Oh, we'll do OMG. So then you go on here. Let's say you have that many Bitcoin, 341 Bitcoin, or maybe you have Ethereum or Litecoin, which is coming soon. That's cool. That's awesome. And then you want to divide it up. Like, you can do 41% and 44% and 1% and 2% and, you know, whatever you want to do, 7%. Oh, not 167. That made that graph look crazy. So there you go. Bam. And now, if you go over 100, see how it went. I don't know if y'all noticed that when I was typing these things in. Let's say I go to 51. It's like, whoa, you got 146%, dude. You can't, that doesn't work. This isn't Bittrex margin or something. So you can just round them all down to even it out and flush it. They have like a quick little button. And then you do that, and then you click exchange, and boom, it does all of that from the 341 Bitcoin for you with that click. That's all you had to do. Pretty sweet. Great idea. Good job, guys. All right. Intuit. Intuit scores a patent for processing Bitcoin payments with text messages. That's pretty cool. If y'all don't know who Intuit is, they are pretty much the premier tax and accounting software. They're the ones behind QuickBooks. They also own TurboTax. They pretty much are the tax gods. And back in 2014, they launched QuickBooks Bitcoin payment service. I don't think really anyone used it that much. Their software isn't always the friendliest, and it's a little cumbersome. But the fact that they're using it and getting into the patent game, just like a lot of other people are right now. Like we talked about Factom recently. here in Austin doing that too, applying for one. It's a few episodes back. Again, all my episodes are time-stamped, so it's really easy to find any content that you're looking for. Do remember that. I try to publish them and edit them all at the same time, so as I'm doing them, it's already ready. As soon as it gets uploaded, it has all of that with it. So, because I love timestamps when I do some YouTubing, so had to throw it on there. And it's usually right at the top too. So there you go. Anyway, so go back, check that out if you want to. Intuit though, big. They're in the Bitcoin space. That's almost that. Like I remember hearing that, and it was like, oh, this is it. In 2014, this is a bubble still kind of too. But I didn't know really about bubbles. I knew about them, but I never got bubble punched. Yeah, that until 2014 and 15. So. You know, and there's not that many bear, unless you trade like penny stocks, but that doesn't really count, or something like real illiquid, like in major markets, like going through like the bear market of it. It's you know, it doesn't happen like all the time. Like, you know, if you even traded in stocks or equities, you know, most of those stocks and the equities and futures and all that kind of stuff, they're not moving 20-50% like every few weeks. You know, it's like a lot. Bitcoin does that. It's new, it's thin, but yeah, I remember when I heard them say that in 2014, I was like, oh man, the big boys are getting on the train. Choo choo, mother effers, let's do this. Yale does some research to identify the best times to buy major cryptocurrencies. So, you all know who Yale is, all right? Don't think I need to go into that. They made some pretty cool, or they did some pretty cool analysis and make a good couple, few points here that I've got highlighted, and we're going to go over. They studied price movements during 2018 or 2011 to 2018 for Bitcoin, 2015 to 2018 for Ether, and 2012 to 2018 for XRP. All right, it's right up here. So that's pretty extensive. That's a lot of data. It's a lot of studying. You know, most places don't go back that far. All right. So they said the most risk-free strategy for trading digital assets under the momentum effect is what they call. And up right above this, they say momentum is actually something simple. If things go up, they continue to go up on average. If things go down, they continue to go down. Profound words. Well thought out. But it is kind of true. I mean, that's just generally saying, like, or it's like the same thing as saying the trend is your friend, right? You get on the trend, ride the trend. That's kind of pretty much what. Different way of saying that, a longer, more winded way. So anyway, back to the risk-free strategy. The most risk-free strategy that they came up with was when a sharp upward move happens, which they considered a week with a move of 20% or more. Hold it and sell the next week after that. Just hold 1 week, hodl a week. People were like, wait, dude, you're supposed to hodl for life, bro. I'm hodling to zero. Yeah, well, good luck with investing, because that's not going to work that great. Hodling to zero. I've done that before. It doesn't work. It doesn't work too good. Yeah, and like stocks where they're like big and then they go penny and then they turn into like 5 or 6 or way too many letters. That's how you know something is booty on the stock exchange, if it has like too many symbols, like too many letters in the symbol. You're like, uh-oh. But anyway, and that's not all the time, obviously. Google, it's not the same, or Alphabet, I should say. But 20%. Just wait for that, and a weekly candle goes up 20%, and then hold it a week and sell it. I wish they would have given like the actual percent gain on that. That would have been nice to know. I'm curious. Another one, I'm sure y'all have used Google Trends or some kind of social media analytics program, or maybe even wrote one yourself to analyze stuff and try to get a one-up on people. But if you do one standard deviation increase in a Twitter post with the word Bitcoin, it yields a 2.5% gain within the week. That's pretty impressive. And I definitely have watched the Google Trends. There used to be one called Topsy that was really awesome. Apple bought them and like made them in-house, so you can't. It's not open to the public, which really sucked because they were so good. I understand why that they used it for themselves. Like, oh, we'll put this in the back closet, back room. No one needs to know about this. So, and it was pretty funny too. If you have phrases such as Bitcoin hack, you know, it's indicative of lower prices. Of course it is. You're just measuring the sentiment in the markets. But I like that they put some real good energy and time and did over a long time. You know, from 2011 to now is pretty good for data over Bitcoin. That's almost the whole life of it that matters. Because what, even if you're like, well, dude, it doesn't have those other couple years. What do you do? Does that even matter? It was like so cheap and pennies and a joke. It's like, so whatever, right? But yeah, pretty awesome. Get it in, Yale. Thanks for a little bit of that research. Keep in mind what I said about this. I'm going to look into that. I'm going to look at some analysis myself. Maybe we can check out a couple weeklies here in a little bit and see if the candle's up 20% or more, and see if maybe we can at least, in Bitcoin, I think we can probably find at least 3 of those pretty fast. So let's see what the numbers are of us testing it out of 3. All right, we'll do that when we start the market overview and analysis. SEC, I'm sure y'all are tired of hearing about them. I know I kind of am. But just to give y'all some more info and details, because you know you want them. Seems like the market is just salivating about SEC anything, which is kind of hypocritical, but that's okay. We won't go into that. SEC will decide on 9 Bitcoin ETFs in the next 2 months. You're like, 9? You're like, what the hell? It's like raining ETFs, man. And it kind of is. And they all are pretty much getting pushed back. And some of the dates are down here. So what happens is they have 45 days to make the initial decision when it first gets filed at the register. And if they want to extend it, they can go up to 240 days right here after the publication in the register. So 240 days. Okay, so they can push them out pretty far. But there are deadlines coming up because there has been lots of filings. You know, y'all have heard about these. Even last year, there was quite a few, right? Earlier this year, of course. And the deadline for these, for 2 of the funds from ProShares is August 23rd. So that's in 2 weeks, guys. That one probably... ProShares is pretty big. I don't know. I guess we'll see what happens. But... it's one of them's going to get out of these 10 over the next 2-3 months. I would be kind of shocked if one didn't get approved. I really think that one of them will. So the next one is the directions for funds. With the 4 funds that they made for Bitcoin, which are, it doesn't say in here, but if y'all remember, we talked about it. And I don't know, a few videos ago. Again, you can check all the timestamps and go dig it up if you want, but it was a 1-to-1 fund and then also a leveraged one. I believe it was 2x or 1.5x. So they have until September 21st. Van Eck has till September 30th. However, they can push it as far back as to February of 2019. So you know, they can push that one back a good 6 months away, which I actually think is likely for that one specifically because it's the physical one. And that one is going to get people real excited, in my opinion. Especially the corporate guys. And even I think the market and like the regular Bitcoiner people too. I mean, it's like cooler to have something physical, right? And I'm pretty sure y'all would appreciate that better than some... I know I hear a lot of the guys talk about futures and how they're just, oh, that's crazy, just fake money, they're manipulating it, etc., etc. And yeah, that could be true. It's hard to say, but we're not going to talk about that here. There you go. There's some updated stuff on the SEC. So guys, let's just wait. All this action and price action, especially in Bitcoin, the market's being real fickle. Any kind of little, it's not coming out, oh crap, sell off $1,000, this sucks. Like, well, really? Like, the thing that's going to replace the banks that you said, or that's what the kind of what they say, right? An anonymous currency to take over governments. The governments and the banks didn't approve you, so now sell off. Some backwards logic there. But anyway, there it is. ICO markets have doubled since last year. You probably wouldn't have guessed that. I know I would have not guessed that. So let's talk about it a little bit. So if you don't know what an ICO is, I'm sure you do. But if you don't, it's an initial coin offering. It's kind of like an IPO, right? For a public offering for stock or something like that. So it can be traded and raise money and all those good fun things. So apparently, in 2018, ICOs have already raised over $11 billion, guys. Billion. Which is about 10 times larger than last year from Q1 to Q2. What? 10x? What? Now it is fair to note that EOS accounts for 4.2 billion of those dollars. Yeah, guys, they raised a lot of money. EOS did. They are a powerhouse. They got a war chest, a big one. But anyway, so let's just take off half of that. So 5 times, right? It's 5 times bigger. In the market, we're in a bear market. That was in a bull market, especially in the first part of 2017. It's really getting nice footing, and man, so that's pretty wild. Think about that for a second. 5x ICO investments in a bear market. Institutional money is definitely not signaling that cryptocurrencies is going away. Not by just like almost this number alone. And if you look down here, continued decline in the number of retail investors. That's exactly what happens. The retail investors are like, what? This isn't going up 10x anymore? Like every week? This is stupid. Yeah, I'm selling this crap. So, yeah, well, I see institutional investors are not doing that. They're getting it. Okay. So Europe has become a leader, launching about 46% of all these projects. While the good old North America is leading investments, collecting 65% of attracted funding. That's weird. Even though there's like, oh, this uncertainty here. Yeah, well, just be spending that bread. Asian-based projects showed an increase in raised funds by about 20%, but a decrease in the number of projects launched by 40% down. So that's interesting, and I also think that's healthy. So money's still flowing in, bullshit projects, and people, like, money is finding a proper home. It always does that, guys. Money will flow to the best assets over time, and it will leave the crappy ones fast. I'm sure if y'all trade crypto, though, you already know that. Let's get into some market action. Oh, look at all these double digits. Oh, it hurts, doesn't it? It hurts, guys. It's not the best. It's not the best look for us. But, you know, maybe if you're really super short everything, it was an awesome look for you. So that could totally be a thing. But I don't know. I don't think most people are doing that. MOAC showing some massive relative strength here. 18% up over the last 7 days, which is cool. This is a nice little metric. And you can change some of these columns and stuff too. If you don't use Coin Checkup, you definitely should. It doesn't have every piece of data like CoinMarketCap, but it has different data. So you kind of have to use both of them still. Yeah, MOAC, man, murdering. Aurora, Hot Token, or Hot is the ticker, but yeah, it's Hollow Coin, Hollow Chain. It's revolutionary if you didn't know. Yeah, so looks like everything's pretty much beat up right now, over double digits, far into usually the 20s and high 20s. It's been rough, guys. There's no way to slice it except for, ouch. I mean, we're at 225 billion in the market cap. We have dropped about 25 of that in, let's see, since August 7th. So guys, yeah, in like 24 hours pretty much that happened. So now we are basing, you know, this would be, let's go ahead and just look at the chart while I'm talking about this. This would be good for volume volume wise in this candle. If price can get caught here, that could be a nice like exhaustion sell candle with this good kind of capitulation volume that could be considered that. That doesn't mean there's not any more downside, but considering the previous price action that we've had here in this base, if it does hold around here, then that could be that type of volume. And notice these big sell-offs always were happening like right after announcements of ETFs getting pushed back. Dude, they didn't even say no. Like, come on. It wasn't the ETF is denied. It was like, well, just wait another month or two. What? I'm like flipping my table over right now. If you can't see me, I am going to do camera and video very soon, but it's like, oh, I'm done with this. I'm going to give away all this stupid magic internet money. It's a joke. And it's like, nah, it's like that behavior is kind of being jokey. All right, let's look at the DMI. If you notice, there is some divergence here. All right, so, and that goes back to here. They are getting a little bit more strength, right, with the DMI. So how I like to use it above kind of mid-20s is they got the power, whether it's bulls or bears, and if both of them though are above like 15, 16, then then it's kind of tough to say. Definitely if one's below 10, 11, they're weak. They're very weak. So you can see here they did get some strength, but they are getting some good resistance there over this trend line back into early June. We'll see what happens after that. RSI, nothing too crazy. It does pretty much look like the price action though. It's just like an A. It's just the middle finger pattern up here. If y'all didn't know, it's a really serious technical pattern. This one. Yeah, it's a really serious technical pattern. And it only works on RSI. I'm only joking, guys. Seriously, guys. People are gonna, like, thinking that in the long term, if people actually start watching me more, they'll be like, well, I thought he was serious about that, you know? I almost have to, like, censor myself? Yeah, right. I think my friends know that that is silly, crazy talk. We are getting some more volatility, though, here. As y'all can see, we are a bit higher than these recent sell-offs, so this does have some momentum. The only thing that's different, though, about this is, you know, let's say we're here. Like, let's say we're kind of, or like here, right? There's nothing to base it off except for kind of way over here, and we're way up in this top part. So, oh, and then it kind of came down to about where this action was, right? Found its little base, had a little rally, and then when you start, excuse me, and when you start selling off and you have a close local reference point like that, then those are going to be very important. Now, what's interesting about this price action here is, like, look at all this consolidation in this area, right? So let me draw a little box here so I can see it a little better. So let's just take like this whole box area right there, the yellowish box, incorporating both of the blue, or the green and the red. Color behind y'all. So this channel, there's lots of business and value, perceived value here. That's why whenever we get to these levels and I have this kind of shaded, like lightly shaded red line, let me brighten it up a little bit because it's a little bit more relevant now. So we're this close to like really being like, holy crap, this is 2014, okay? That's still not confirmed yet. Everybody says we are. We just completed a pattern too in sequential. I'm gonna go ahead and show y'all, give y'all a little sequential action. We did just close the 9th candle too, number 9. on the downward slope here, and we're making the next, maybe the number one. We'll see what happens in a new uptrend or not. It could just continue down and keep selling off. But I would say sellers at this point are pretty exhausted. Like talked about earlier, September 2014, 10 out of 11 days negative, and like in that range there in late September. That hasn't happened until today. And so now everybody, think about that. Everyone's gonna probably be like, oh, see that we just hit like a record of down bearish days, just like 2014. This is definitely 2014. Don't get too bearish here either. And I'm one to think that I would actually like us to go to this red trend line, which is a way longer term trend line, based kind of off the market psychology graph, like the mean average, and then where it goes to the blow off. So this is kind of that line on a really long term scale of Bitcoin, pretty much like its entire chartable life. And so I do think that if we could get down there to like sub 2,500, that would be really awesome. And you're probably like, oh my god, like screw you, dude, like unsubscribing now. But just listen and hear me out a little bit. Like, that's healthy for this action. Let's not forget, let's just take out the last year. Oh crap, look at this. Look at this. Going back into early 2017, we were barely like around $1,000, okay? So it's totally possible and doable. And so in a year we went from 1,000 to 20,000. You want to see what that percentage? Let's just take it from the middle of this little A-frame pattern. It's about 2,100%, okay? Not too shabby. Not at all. And then now we've been down, I think, about 70% off of this low here, and maybe a little more there. We'll just go ahead and draw it. And, you know, we'll do it with time, too, to see how long that's been. Bam. Since that low was made, it's been about 190 days and down 71%, all right? And I believe the old bear market was like 400 and something days. It's all over the Twitters. You can find it on there, but don't put too much like weight on just those numbers. Do realize that history rhymes. It doesn't repeat itself, so it can kind of be close. That's why I don't think we're out of the woods yet of like it being stupid bullish at the end of this year. And I've been talking about like we need August and like half of September. Now, since they kind of pushed off, I'd say the next 6 weeks are going to be critical, and we'll definitely have an awesome idea if that's going to play out or not, or has the probabilities of it playing out. And right now, this actually to me looks like a perfect kind of setup. This sell-off seems a little bit like fear-based and emotional-based, not really. And it could sell off. Excuse me, it could sell off more from here, absolutely. And it could be really easy. And it's definitely a higher probability now that we're below like 6,800-ish, 6,700, like definitely with this big candle. But considering the fact it wasn't just natural sell-off from like a gigantic run-up, right? Like we didn't go to 10K and then sell off hard and give up 60, 70% of it. We just popped real good, 20%, and then just lost all of it. But most of the time we lost it, it wasn't because of natural price action. It was like, oh, ETF is getting delayed. Oh, crap. It's getting delayed again. Oh my god, a different one's getting delayed. Jesus. I'm not sure if that's that rational of behavior. So, and fears really gets people to do dumb things. And time-wise, we're right here at the 9. So this is interesting. I don't put a lot of weight on the sequentials, but I do like time analysis. Do not forget you have two axes here. You got horizontal and you got vertical, price and time. As I talk about like positions, and when you enter too, don't forget like, oh yeah, if you're targeting and doing risk reward, maybe you're gonna buy here and take it off at the top of this box, or and cut it out at below this, you know, the bottom of the box. Also have like a time frame you want that to happen in, right? Like based off previous action, how it's kind of moving, like the waves, like think of it like as a sine wave, if that makes sense, right? So just kind of think of price action like a sine wave, and it's like always kind of doing this and doing this and doing this and doing this or doing this or whatever, right? It moves like a wave. So you can like kind of see these waves and just kind of mark from there, like, oh, it looks like it's kind of been doing that price action over the, like, okay, a couple weeks, and you know, just kind of be like, oh, it looks, and it's all art, man, but you can get kind of close, be like, oh, it looks like it does things like that. I mean, and that could totally just be like this too, but it looks like it kind of does larger moves every week or so, right? And that, if you've been trading Bitcoin for a long time, that is about right. It does like to move pretty big every week to definitely within the month. But anyway, so you wait time. Maybe you're like, okay, by the end of the month, this trade needs to work out, or I'm going to take it off outside of that. Because if we go sideways, like think if we just went sideways while you had that trade on, and we're like over here, the move that's about to come out of this is going to be big. In either way, it doesn't matter. That's irrelevant in what I'm explaining. But so the risk now has amplified as it's gone sideways because the move is coiling up and it's going to let off the steam and the top's going to blow off, right? Or blow out to the bottom. This is just pressure, like you're pressurizing the price, like in a pressure cooker, and it's like, dude, it's going to go. It's going to give it a nice boost one way. So it just, the risk grows as price consolidates. So, all right, let's erase that one and that one and that one and go to some Ethereum. Probably looks terrible. Oof. Yep. Ethereum is not looking so super hot, but it hasn't been in a long time, guys. And we're watching. We've been paying attention to this. Now you had this trend line. It was a magnet for a long time, and then it just snapped away from it. Look how fast it happened too. So let's go ahead and delete that trend line. Now we are in a not so great looking pattern. It only has 2 touches on the bottom here though. I mean, I guess I don't really like to count the first ones where you draw it from. Like this one I don't really like to count as 1 touch, but you can. I don't know, it's probably splitting hairs, doesn't matter. These patterns, descending triangles, are pretty bearish generally. Price does have to break out though of the bottom part of the triangle, so do be aware of that. They also can negate the bearishness if it stays above this and breaks out somewhere on this trend line. So, but these are more akin to bearish patterns, continuation patterns too. So just be careful out there. We are right at the what we called about 350 as really good support in some videos a week or so ago, because Ethereum wasn't doing anything, so we were like, oh well, it looks like here's about 350, we gotta keep it there. It's getting caught there. Let's see if it can hold. Like right now we are in the critical danger zone, and most of the charts are going to be like that. Some of the altcoins already broke down, like Ripple broke down. Here you go, Litecoin, same kind of position. Channel at the bottom of the channel here. Let's see what the internals say. Not a whole lot. Slight, the smallest divergence right here. An RSI. I mean, it counts. It's there. Price is lower. Boom. And there is some divergence on both of the DMIs. That's pretty good. The only thing that's not good, though, is this is above the mid-20s. Now, it could start turning around here. We'll see, but that is something to note. So that means the bears are fairly strong at the moment. But this is consolidating in a lot of price action all right here. All in this, like, 50-ish zone, give or take 10 bucks or so. Yeah. So, same thing. Break out of the bottom of this price action. This one, I would maybe more follow. I think I'm following more the channel than a specific price. So, I'm going to adjust that channel to give me a little extra room right there. And I'm going to keep that as kind of like a, oh my gosh, it's about to go real hard to the downside. And I guess 50 would be... Actually, let's let volume profile tell us. Yep, 56. I knew it was close to there. So, 56. I'm going to call it 50. If it goes below 50, that's danger zone. Danger, Will Robinson. Alright, let's go to the rips. Yeah, see, Ripple just completely got crapped on, sold all the way off to 31 cents on increasing volume. Now the volume has diminished, but we are only some hours into the day, because where I'm at, it doesn't close until I wake up tomorrow in the evening too. So it's going to be a hot minute. Anything could still happen, but do notice we were talking about volume. Not just on XRP, but Bitcoin as well, and other coins. We needed volume for conviction. If the price action drops below some of these levels and the volume continues, like, this is going to get gnarly. But it could put us into what I would almost call like a perfect awesome scenario of capitulation scenario, where we just flash crash like no one has ever seen before. Because don't forget, almost anyone that bought last year is still up. Okay. The market usually likes to deal the most damage and hurt the most people as it can at once. It tries to be efficient like that. So, do realize that at this moment, we are kind of there at that critical zone. So let's see, watch it, keep an eye on it. Set your alerts. Don't overwatch it. Go live some life, you know? Okay, so let me tell you about averaging in tranches, okay? I think this is really important for risk management, which is one of the most important things in trading. Besides managing your own psychology and not doing dumb things. And I'm going to talk about this a little bit because I made a really dumb rookie mistake in trading, and also like something dumb just in life too. Don't need to go into details about that, but yeah, pretty wild how it kind of happened at once. But that's usually how they do happen. But so I usually am a little bit early, and I did preempt myself and buy in this zone around here on my paper account, right? On this little doji, okay? And, you know, I was like, oh, this is probably going to be a good spot for a bounce. The next day happens, and I was like, I'm just going to keep it unless it gets back into this green box, right? And I don't do that. And it goes and gets close. It's like doji. We even talked about it in the video. Doji. I didn't say I was long or anything, but doji. Spinning top. And it's like, oh, price. And I think I even was kind of like sounded concerned a little bit, but that didn't matter for some reason in my position. I didn't adjust it when this candle confirmed and closed here into the green box. So I would have lost the trade, and that's okay. It's not, you will always lose money in trading. It's inevitable. You have to be able to accept that. And I have accepted losing the amount of risk that I initiate at the beginning of the trade, which I'm about to show y'all that here in a second. But so on this candle, that's it. I'm done. That's it. The trade is bust. Okay. And this right here area, bust. Boom. Out of there. Should close it. Now, you don't have to get short right after you don't always have to be in, but from that specific trade, I should have closed it and then been like, oh crap, I gotta wait for the next opportunity. Because the odds of it crashing were a lot higher here, and that was my trade. Even if it didn't crash and it still went in here, it's irrelevant. It was done, and that was my initial plan. And I didn't do that. I kept the trade on, and I'm actually still in this position. Oops. I'm still in this position from something I shouldn't be in right now. okay? And I felt kind of weird about it, but I didn't do anything. And those, man, your gut's usually pretty good, especially when it's telling you to, like, be cautious about something. But, you know, sometimes you just aren't paying attention, or other life things happen, get out of the way, and that's okay. But there's no excuses, though, okay? Sometimes it happens. But that's not you don't need to make an excuse of, oh, well, my dog got sick, I had to take him, I couldn't do it. Yeah, well, it's pretty easy to do most of the trading on your phone, so just don't even make excuses. You should either put the order in so you don't have to deal with those problems, and then they start building really negatively on you for future trading, and you usually will keep stuck. You'll be stuck, and you'll keep just thinking about those mistakes that you made. Like, I know there's a lot of people, you know, that were buying all up in when it was pumping, thinking it was going to 10. You know, there's a lot of Twitter spheres, and the cryptoverse was already preaching for 10K, you know. But, you know, we were always talking about it's got to close dailies out of this box. Like, at least 3, or it's not real yet, okay? And it didn't even get close. Tried, didn't get close. That was actually, in one of the videos, actually was saying this is a great risk to reward shorting position. I did not take that one, and I feel really dumb for that. I missed an opportunity. You know, but this gets you, like, when these big moves happen, and like I said, that was a rookie mistake that I shouldn't have done, and I thought I could catch the dips here, catch the knife, right? And it was a decent risk to reward spot here, right? Because you have here, and you kind of have about here. That's not that bad. But then when I get dumb, and then it tells me to close, this is what happens. And those are swift, okay? Now, I'm usually a little bit early in trades. This is what's funny. You'll get in, and then the market will go against you immediately. Then you'll close because you're like, oh, I'm an idiot, but you already shouldn't have this position here. And then what will happen is this will go up and be right back where your original price was, or maybe somewhere up here in my example, right? And so that's usually what happens. And you got to learn that you need to already manage the risk and adhere to your plan. Plan your trade and trade your plan. Plan your trade and trade your plan. And so I'm going to show you a cool little tool in TradingView. I've used it a couple times. I think I've shown on one of my videos. If you look on the timestamps, which I do on all of the videos, and I'm starting to add a little thing where it's TradingView trade hacks, or TradingView hacks. So if I do something like that, I think maybe a lot of people don't know how to use a tool or something like that, I just put like a little clip in there so you can, I'll show you how I add it or how I use a feature in TradingView, because I know TradingView is a little intimidating. It's got a lot of things you can do with it. So, but just FYI. So anyway, let's say, let me put this on my example here, okay? All right. So, it wasn't exactly this, but this is just going to give you the idea, okay? So let's say, get in here in this candle right here. This is your entry. Is where the green, the white line is. It's like in between there, between the green and the red, okay? We're right here. So the risk that you want to take, you can drag this down to adjust it however much you want. Maybe you want to go all the way to the end of the box because you're just like, you know, screw it, I'll do it. You can do that, that's cool. But that would be a lot. You might want to adjust, you know, the top part. You really want to get at least like 2-to-1 ratio, right? So that means this box, the green one is double the size of the red one in a visual stance, or in a visual perspective here. So if you go down here, let's say I'm going to take my risk about here like I was explaining. Once it gets kind of in this box, then I'm done. And I like to go a little bit further. And let's say I didn't know this candle happened. So I'm like just putting it at the wick of this candle-ish. And so I'm looking for the resistance here. This would have been a realistic target for me. It's just like a few $100, a little bounce. I just really expected that that would have happened right there. It did not, obviously. That's okay. You will be wrong. So this is kind of my little target. Price action right here on this candle was done. It confirmed. Not only did this barely ever get in the money, like profitable, it's the next candle just slammed through it. Okay, done right here. It is, your trade is out of there. Look, it's already like, and let's just assume you waited till the end of the day. Like, likely if price already was testing this on a 4-hour or something like that, like let's say you want, we can go look on a 4-hour. Yeah, look at that right here. They tested it and you're like, oh crap, one more little fake out, and then just dumpy dump McDumpson. And then so if you zoomed in on a 4-hour, yeah, you're looking here at about 6,700. If you're looking on the daily, you're at actually right about the same. So nice. So call it about 6,700. You're done with that trade. You lost. Move on for the next setup. It's all good. You lose some, you win some. And so that one sucks a little bit because the price moved fairly quickly. So that one could have trapped you in that day. So you lost a little more than you thought. And so that's about 7,000 to, so it's about 300 bucks. That's way more manageable. And that's about like where you're looking at. You're like, oh, that's not too, for the 2 to 1, 3 to 1, like that's okay. But then like when this happens, it totally changes your mindset. It messes you up. Especially like later on when you trade for your future trades that you're going to make out here, over here, or down here, right? So do keep that in mind. I think that's really important to adhere to those trades and the stops. Like you can always get back in, right? As more data comes and it goes sideways and does whatever it's going to do, you can get back in. There's infinite opportunities, guys. Just manage those damn risks. Get out of there. And I just wanted to kind of share that with y'all because I did something just really dumb. And like I just was like, wow, I haven't done this in years. Like what the hell? Not years, but at least months and months, which is good because I make a lot of paper trades. So given the volume of my paper trades, I would say that it's definitely going months and months and not doing that. Usually I'll do it and then I'll just like be like, oh, you're dumb, don't do that, and then I'll just like take a little bit more of a loss. But this time I just, like I said, I'm holding my paper trade right now still in paper losses. So see what happens. I just have to now accept that now I just turn what risk I didn't want to have and I just turn it into, well, now I kind of have to be here because I know the nature of markets. And you shouldn't, like, I'm not going to double or triple down here or nothing like that, not in that trade. But now I'm like, well, crap, it's already down here in a day. Now it's the bottom of the box. I really didn't want to do that, but it's like, what are you going to do? I had to kind of adjust to it. We are in this weird A-frame pattern, whatever this is, guys. I don't know. So I hope that kind of helps a little bit. Another way to mitigate some of this too is using a tranche method. So I know I said I was going to talk about that earlier in the video. Let's just mention it real fast. So let's say you go into here and you do that, and it's the same kind of setup. Sorry, I'm sorry. I'm actually going to take price out of this because that's not really I'm just going to make up my own price. It doesn't really matter. It's the principle here. So price is like coming in, blah 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 blah, right? Price, and then it's right here, and that's where you put the trade on, and you're going long. And this is, you think it's going up here. You already did all the math on it. You like this risk to reward, okay? And it looks about a 3 to 1, right? The box sizes and stuff. So let's say it goes in, does pretty good, and you're like, oh, dang, this is looking bullish. And then it does this. I'm going to draw it, and then I'm going to show you kind of what you could do. And then also, oh, I'm sorry. I got to I'm getting ahead of myself a little bit. If I take this, you want the time frame too, right? Like I said earlier, don't forget there's an x-axis as well. And let's say this is with this scale down here. So about a month. I'm giving this trade about a month, and it should work out. Or it's not, and I'm going to move on to the next opportunity. But likely you're going to be stacking more opportunities on as time goes on as well, right? So you got the pink line here is the price of what this made up kind of, let's just say that's Bitcoin. It's Bitcoin pink. And your first tranche is here. You get in. And then let's say you trade in like 4 tranches, or let's do 3 just for simple. It's easier. The easier it is right now. So you have a Bitcoin and you do tranches. So you do 0.33 Bitcoin for each time you buy. So right here you went in long 0.33. And you're going to accumulate over time and in your trade until kind of about the end of it that like the rest of the tranches. So in here you could go 2. That could be your second tranche. You're like, oh dude, it's about to break out, and that's okay. Sometimes it happens. And then right here you're like, oh my gosh, I'm so wrong about that. And then it gets back to this area. And you go, and it kind of gets down to this low area. You can go, this is 3. Tranched in. So you're here. You got to average it out, right? Here and here is about here. And then between here and here is about up in here, right? And now you're in for 1 full Bitcoin. And then let's say that this finally happens, right? Towards the end, but doesn't hit your total target. But it hits your time target. Take the trade off. You're done. That's it. Sell that tranche. You can also sell them all together. Sell it. Sell it. So it's a way to not go all in, right? When you don't know what, you never know what price is going to do, but not go all in with the whole Bitcoin right in from the get, right? Because if it just does this, and you're like, oh my God, you're like, I knew I shouldn't have got that. Stupid trade. And your losses will be big faster immediately, right? Maybe it drops like right if you buy it like 200 bucks. You're like, damn, I'm down 200 bucks. Instead, you could be like, well, buy, and you're kind of averaging down, or it could be up, depending, because if you get confirmation of kind of blowing out to the upside, you might add to your position. Adding to winners is a really good strategy. It's also very hard to do. But when this happens, you do that 1, and let's say you do 2 here, and then let's say you do 3 here, maybe, right? It's still, it averages out, it's good, and it takes out a lot of the risk and scary part of like when you're wrong, because a lot of times your entry will be good, and then the market just knows how to shake people out. It's really weird. The more you trade, you're like, dude, it's like it knew. It's like it knew that I wanted to get like out right here, and then it reversed immediately. Like, dude, it's so good at it. It's weird as hell. So that's how you kind of can mitigate that a little bit, so you aren't so scared when you look at profits. I've also heard of traders, good ones, saying that like they just turn off the profit, like where they can't see how much they're up or down, especially in a dollar wise, maybe in percent wise, but dollar, they don't want to see the actual number because we have a psychological connection to, and not in a good way, to money in trading context. So we see down 300 bucks or something, we're like, oh my God, $300. But maybe you, even in a trade where you risked 1,000, but you see that 300 number down, it's like, you're like, oh God, I can't do this anymore. Even though, like, let's say a month before you put that trade on, and it's just been kind of flat, maybe around there, and you just happen to look at it, and you were like, if it goes down $1,000, I'm closing it. And it's only down 300. You'll trade emotion, you'll close that, and then it'll go up, and you would have been right, but you sold it because you totally managed your trade off of emotion. Had nothing to do with even your original idea. Because I will preach that on most of these casts. That's the only thing you can control in the markets. It doesn't matter about news really or anything else. You can control your entry price and when you manage it on the upside and the downside, and that's it. There's nothing else. So just focus on that, like what you can control, and you'll be a way better trader. All right, so looks like Bitcoin's trying to get a little bit of a support here. If it doesn't, y'all already know the deal. This box is letting you know we're at the bottom of the range. So this is probably a low risk area for entry if you got a little bit of balls. As I said earlier, my paper trade is already getting bald whacked a little bit from a dumb rookie mistake. But hey, you know what? It happens sometimes. Live and learn. Just don't do those more than you do good trades, right? It's all about averages and the distribution. So keep careful here, guys. Be nimble. Be quick if you need to get out, because this could fall very fast if we get some more momentum. But there should be at least some sideways action, I think, from here, given the time, like sequential things, this weird pattern too, this little A pattern, and it being one of the worst sell-offs, not percent-wise, but days in a row wise, since September 2014. Can't wait till everybody comes out and says, see, this is 2014. Y'all know what's gonna happen. All right, with that said, again, this is Z-Rex with No Noiz Research, and I will chat with you guys tomorrow. Peace.